Hello, hello. Welcome to the flood insurance, the National Flood Insurance Program webinar. That it is my delight and pleasure to have Rich Costanti from Responsive Insurance talk to us about what in the world is happening with the National Flood Insurance Program. I always say hello, good day, wherever you are in the world watching this and whatever time you've signed up for this webinar. We are so happy to have you in attendance. So, Rich, hello, how are you today?
I'm doing great, Mary. How are you? Thank you for having me.
Oh, my pleasure. This is such a hot topic, as in that the government changed all the rules when back October 1 until we're going to have something new happen April 1. So why don't we just get into it and bring up the slides?
Absolutely.
So as you can see, the National Flood Insurance Program now is called Risk Rating 2.0. And this was effective 10/1. Anything you want to say on that, Rich, from that slide?
No, I mean it's a major change that's going on from 1.0 to 2.0. It's gonna help most of the country, but coastal areas are going to be impacted significantly, I feel.
Yeah, sorry, I'm trying to work my computer. These are the great glitches that I get along the way. So let's talk about what it was. This new pricing methodology that impacted the new flood insurance policies, as you just mentioned, and those that aren't going to be affected until April 1. And those existing policyholders can take advantage of the premium decreases at the time of their renewal, effective 10/1. So, the interesting part of all this really is, I guess, before we get into what is changing, why is it changing? Rich, can you tell everybody about that?
Well, the NFIP policies were it was going bankrupt. They were losing money. They were paying out more than they were bringing in. We had some significant flooding events over the past 3-4 years that have really impacted it, and FEMA felt they needed to change the rating in order to refund the fund so that they could help stay viable and protect homes should catastrophe or claims happen again.
Exactly. Now, what is then changing? What happened before 10/1?
Okay, so before 10/1, your rate was based on the biggest changes. Your rate was based on your zone and your elevation. Then they had this thing: if you were in the X zone, they called it the preferred risk zone, and they locked in your rate based on being in the next zone. So, for instance, this past year was $572 if it was a primary dwelling, $797 if it was a secondary dwelling, and it didn't matter if your X zone was in Naples, Ave Maria, Orlando, Nashville, Tennessee, Chicago. X zone throughout the whole country were the same rates. Now that X zone, that preferred risk rate goes away, and every home is rated the same way. Zones factored in, distance to coast, construction type, and replacement cost are the four major factors that factor in. So we're seeing some significant change. The last major change is in 2.0. Elevation certificates are not required. They are recommended in some cases, and they can only help the premium, but they're no longer required, where before, if you're in anything in AE and AH, a V or a VE zone, they were required before we could get a proper rate. Now we can rate it without an elevation certificate, and if you have one or you have an elevation survey done, then that can possibly help the rate, but it will never hurt the rate, an elevation certificate.
Right. Which, does impact honestly, a lot of our customers here in Southwest Florida from that perspective, because let's see if I can get my mouse in the right way, because we have some higher elevations that we're getting that X factor, so to speak. And now everything's going to be rated how far you are from the water. And like islands like Sanibel, Marco Island, Fort Myers Beach, etc. Those are pretty close to the water, which is going to be interesting.
Absolutely, they are. Mm-hmm.
So again, the why, it's really the value of this is that they were going bankrupt, right?
Mm-hmm.
So some of
Yeah.
those lower value homes were paying the highest rates, and now the policyholders with lower value homes will see an immediate decrease in insurance cost. And they're saying this is coming off of the the national FEMA program that comes off of a sheet like this for us as consumers. Are you seeing that there's a decrease in insurance?
So when they're talking nationwide. So throughout the
Right.
whole nation, yes, that's true. It's not that they're lying. It's not that they're being fudgy with their numbers. They're being factual. The problem is we're so coastal where we are, and Florida is surrounded by water on three of the, where it's a peninsula, so three of the sides, and we're seeing rate increases. I have yet to see a home that has decreased in premium in 2.0 versus 1.0. Not saying it
Yeah.
doesn't exist, not saying it won't happen. I haven't seen it, and no one I've talked to in the insurance world has seen that yet.
Okay. So let's kind of go down this path because you've given us some really great examples, right?
Yeah. Yep.
Um,
I have three examples here. I'll talk through this first one. So this is a Marco Island home. It is in the AE zone. The base flood is 8 feet. Okay. Now the home, it was built in 69, so it was pre-firm. So the elevation is 7.4. So the elevation is technically negatively elevated, 0.6. And I just put on there talking about the National Flood Insurance Program. It does require a 30-day waiting period for all new policies unless there's a loan closing involved. There has to be a loan transaction where the mortgage is involved because the mortgage companies require the policy to be effective immediately. So that can supersede the 30-day waiting period. Nothing else can.
Let me pause you on this for one
Mhm.
second. So you said something that's super important. We have 52% of our transactions, the families we help, are cash. And so what you said is if we're thinking about closing before 30 days and they want to have insurance, that's not an option. Is that
Well,
correct?
well, through the NFIP, there has to be a 30-day wait. So, for instance, if you're closing in 24 days, they bind and pay the premium today. They'll close on day 24. They'll have 6 days with no flood insurance, and then the flood policy would start on that 7th day after closing, because it's a 30-day wait from the time you make the initial payment of the
Okay.
premium. So if you want to get, and that's through the National Flood Insurance Program, if you're looking to get flood and you're doing it through the NFIP program and there is no mortgage involved, then you need to try to bind it 30 or more days before the closing, which
Okay.
gets tricky sometimes because there's fast closes or closings get delayed or pushed up. So, but understand the policy could still go in effect. You would just have a small gap of no insurance basically. So in this example here, the NFIP maximum building coverage is 250,000, content is 100,000. I quoted the NFIP 2.0. This one I had the elevation certificate, but it's negatively elevated, so it didn't improve it at all. 5,684 would be the 2.0 rate. I was able to get a private flood option that came in same limits at the 5,171 level, so it was a little bit lower going the private option as opposed to the NFIP option. And I'll talk more about private in a little bit. In this case, the sellers of the home did have an existing NFIP policy. So that grants you a discount that qualifies you for the 2.0 glide path. So just because they had a policy, you're getting a credit as the new buyer, and that glide path rate comes in at $2,272, so it saves $3,412, which is a
Wow.
very good savings. Yes.
Right. So the biggest thing is the private insurance and the national flood insurance were not that much difference. but with the national flood insurance and this new glide path, which Rich, talk about that. That's a percentage increase year over
Right.
year.
So glide path is used in two ways. In this way, it's a new policy for a home that already had an existing NFIP flood policy. The other way you hear it is someone who has the home, has an NFIP flood policy currently, and then their policy renews. When it renews in glide path, which guarantees that that premium will not increase more than 18% year after year. So in this case here, the full term premium was $56.84. The glide path rate is $2,272. So every year that they keep this policy active, they'll have an 18% increase. Well, up to an 18% increase until they reach that full premium. So 18% to go from 2272 up to 5684, it's going to take some years to get there. So and like I said, the glide path is for new policies that the home has a NFIP policy within the last 365 days, or an existing policy. So, for instance, my home or your home, Mary, have an existing policy. When it renews, it will renew in glide path 2.0 at the 18% cap.
Yeah. So do you have an example of this? I don't know. What were they paying before? Whatever the 20, I'm gonna have to buy glasses.
No, my guess, I don't know what this previous policy was, because I didn't have a deck page. I just got the policy number and who it was insured with, because that's what we need to require it. My guess was that was probably about being negatively elevated on Marco AE zone, probably about 1,400.
Yeah. So
in
whatever,
the 1.0 rate, they were probably about 1,400. Yes, would be my guess.
But keep in mind, it would have been 18% relatively under the 2272. So whatever that math is what it is. And we have, let's face it, Rich, we have a lot of homes that are downtown Naples that are original homes, Marco Island, original vintage homes is what I call them, that are only maybe 7 feet elevated, right?
Mm-hmm.
And if the base flood is 8, which on a lot of Marco it is, and in other areas, it is going to be under. So, and Isle of Capri, those are the areas where we see this to be the biggest issue. But now it's going to be even a crazier issue from that perspective. But this is one, that is just really older home, that we're going to go through that path.
But I do want to point out something. Let's remember that figure of 5,684. Because I'm going to reference that here in a little bit. And remember, this is a coastal home on Marco Island. Excuse me. I believe it backed up to water, I believe.
Okay. But even honestly, whether it does or not, Marco Island's a 4-by-6 mile island, let's face it. So the inland homes are not that far from open water. I mean,
correct.
Which is a crazy part. Well, let's look at the next example that we have here. So go ahead and talk about this one.
Okay, so this is a Naples home. It's an existing structure. It was built in 2019. It's an X zone. So this is what we were talking about 6-8 months ago, and before October 1st of 2021, we were looking that this would be the preferred risk zone. They'd be looking, between $600 and $800, depending if it was primary or secondary, for an NFIP policy. Now, I put a little asterisk on here. This home is in a development where the developer backfilled the lots and raised the lots above the flood zone. So if the builder didn't do that, it would be in the AH zone. But because it was backfilled, it qualifies under FEMA as an X zone. Okay.
Or did.
It did. That 2.0 rate, would be 7,832. Now remember what I said. The Marco home was 5,700. This is 7,800. This home is 1.3 miles from the Gulf, and you're paying 7,832. Again, location factors, and this home's positively elevated as opposed to the other one was negatively elevated. The replacement cost of this home is about $600,000. The replacement cost on the Marco home was only $300,000. So that's factoring in a lot now. So 7832 would be the NFIP 2.0 with no elevation certificate. With the elevation certificate, it drops to 6273. Saves about $1,600, which is nice. Okay. But we got lucky because, again, it's an existing structure on this home. So we were able to get them the glide path rate, which was $908. So
Yeah.
that's almost a $7,000 savings.
Wow. So newer home, because there's two values in the home, right? The land value and the house value, structure value.
Correct.
And they are going on the basis of this is the structure value, not
that is a factor. Yes.
right.
Yes.
So the structure value, how close you are to the water. So this is double priced of, is it the appraised value, Rich? What value are they using?
Okay, so it's what they consider a replacement cost estimate. So we take a look at there's software out there. It's the same software that claims agents, claims handlers use when there's a claim to estimate the building cost of the damage. It's the same software that factors in the zip code, construction style, standard, above average, custom, premium, factors in material costs and a square footage, and it comes up with an estimated replacement cost.
Okay.
A replacement cost estimator is something that every insurance agent should run on every home. Okay. It never was a factor in flood before October 1st of 2021. Now flood runs their own replacement costs, and you can see on deck pages where it has a replacement cost estimator. Now, I have yet to see the flood one match a homeowner's one that we do, but that still factors in. The flood ones generally are estimated lower than the homeowners ones that we've seen so far, and I don't know of a way. They have not released us a way to adjust that cost. It's a cost that happens behind the curtain with the policy, and they throw it on the deck page. But for the homeowners ones, we can, as the agent, go in there, either take the listing or talk to the buyer and come up with what the interior is, how updated it is, and come up with a replacement cost estimate. And again, that's one of the ways we get to the dwelling coverage amount. The other way is we take land value or purchase price minus land value and factor in whatever the slab will cost, and that should get us to hopefully the same ballpark.
Yeah.
But for flood, they run their own replacement cost estimator that factors in.
So
and again, these are all
box.
Correct. Yeah, these are all the NFIP. So the maximum coverage is $250,000 for the dwelling.
Rich, we probably need to. I haven't asked a question yet. Hey, if you have a question, feel free to use the chat. And we'll below, or you can email us at info@bartosgroup.com. But we'd love to hear your questions. So I don't know if anybody has a question. We'll keep going, and if we see one pop up, then we'll answer that one. Okay.
Absolutely.
Okay. I think we have one more.
Yes. Mm-hmm.
Yes.
Okay. So this is another Naples home. This is new construction. It was April of 2021 was the construction date. It's an X zone, and there was no elevation certificate available. The NFIP came in at 2557. I was able to get a private flood option at 737. Okay, now the difference between this private flood and NFIP private flood is this private flood has additional coverages in there, such as other structures coverage, loss of use, ordinance or law coverage. Those are all, you'll see them on your homeowner's policy as well. They're all part of private flood. NFIP does not have that. The other thing is the dwelling amount. This one went up to $370,000, where NFIP's locked in at $250 maxed out. To get to the $370, you would have to buy an excess policy above the NFIP, which would be even more money. And the last benefit of private flood, and some require double deductibles, some, like this one, has a single deductible. The double deductible, which NFIP has, would be a deductible for the building damage and a deductible for the contents damage. Where some private options like this one here offers a single deductible. So for all your damage, it's a single deductible, just like on the homeowner side. Private flood generally will look more like a homeowner's policy and will protect you with the same areas of protection that a homeowner's would, just from flood, where the NFIP does not always include replacement costs for personal property. It does not include other structures coverage, loss of use, or ordinance or law coverage at all. Okay, and ordinance or law coverage, in case anyone's asking, that's a coverage in case the home, in the course of repairs, needs to be brought into current code. That's that allotment of money that goes over and above your dwelling. Should you max out your claim, then your ordinance law will help bring the home into current code. It gives you an additional allotment of money.
Wow. So that was a lot to unpack.
Yes. Sorry.
You know, no, and I love that. So the takeaways, first of all, what are we offering you? You know, hey, make sure that when you signed up for this webinar, you put in your address, your name, your phone number, etc. Because what we're going to do is Rich is going to just give you a couple of options: what a private insurance would be, and what National Flood Insurance Program would be, so that you have those. So that as wherever you are in, a renewal or a purchase of it in this process, you can kind of get a feel. Rich, can you also tell if there's currently insurance on the home?
Right. As of right now, we cannot tell if there's currently a policy on the home. Unfortunately, that's not something, there's no database for that yet. Hopefully in the future we will. But if you currently have an NFIP policy, I'm still going to go ahead and run the proposals for you, just so you know. There's two things I want to talk about there. If you currently have an NFIP policy, prior to April 1st, you're going to have the option of either renewing in 1.0 or going to 2.0 with the glide path. So upon your renewal, you're going to get the option of one or the other. Okay. After April 1st, you're going to automatically get renewed in Flood 2.0, but you'll be glide pathed. So the glide path I talked about before, after April 1st, will become what happens with all the NFIP renewals. Prior to April 1st, you or your agent can let you know, can decide if you're going to go in renew in 1.0 for one more year, or go to 2.0 with the glide path. Now, the good news is, if you choose 1.0, and then FEMA, as they're doing their reviews throughout the course of the year, realize that it would have been a better bargain for you to go 2.0 with the glide path, they'll move you over at that time and issue you a refund for the difference in premium. So either way, they're going to get you, you're going to get the best rate, no matter if you choose to stay in 1.0 or go to 2.0. It just may take some time for you to get that refund. But your agent, your flood agent that you have, should be able to help you, walk you through that process. If they can't, give me a call. Not that I can become your agent, but at least I can give you the tips and the pointers of what you can do, what you can ask your agent, so that you're in the best situation possible.
Yeah. I mean, so this is a new program from FEMA, right? And at the end of the day, we're all learning as we're going, hence for the webinar. So flood is changing, period, the end. There's not a choice. Whether someone had a flood insurance policy or not makes a huge difference when you're buying a home. When you're selling a home, it also makes a huge difference on affordability, if you have one or not, on the new buyer, as to how much they get. This is going to make a lot more difference on someone with a lower priced home than a higher priced home, because it's even though the dwelling is more, etc., it's going to be a lower percentage of the money or the property income to buy that property. Mm-hmm. 1. 2, what I'm hearing you say is it also is an option that if it's a new construction, we're going to have to just use the new program, which is expensive, but we could go to private,
Correct. Yes.
correct?
Mhm.
Right?
Yes. 100%.
Um, the last thing is that we have on this is FEMA is giving us a path to get to their no pricing. And to me, it looked like in some of the numbers I was doing around 10 years to get to this pricing with the glide
Mhm.
path, whether you own the property or you sell it to somebody else and they use that. Now, FEMA's program, as Rich said, only covers 250,000 in the dwelling and 100,000 in contents. So private covers more stuff. You get more
Correct.
coverage with that.
Yeah.
So we're just going to have to work through this, Rich, I think, with all of our clients to see what works best for them when they're buying and selling. And then, I think it's a no brainer if you already have one from a standpoint to go to the glide because you don't want to go to the new unless you want to cover a whole bunch more, correct?
Correct. Right.
Okay. Last but not least, in a recap on this is if you are paying cash and you want flood insurance, which I personally have a number of clients that do, you're going to have at least 30 days when you pay for it, right? When you bind it. Is that Rich? Did I
Correct.
understand
Yes.
that?
It's a 30-day waiting period for any flood policy that would be a cash transaction. So if you're closing 32 days from now, you can pay today, make it effective the day you close 32 days from now. But if you're closing in 24 or 24 days, then you would have a 6-day lapse where you wouldn't have flood coverage.
And that may be okay for some of our clients, but for some of them, it's not. Now, if you're getting a mortgage or a little bit of a mortgage or whatever you're doing, you have to have flood insurance. So they can, if you can get that process through in less than 30 days, which may not work, right? But if you could, the flood policies can be pushed forward.
Correct. Right. And even if you're in an X zone and there's a mortgage closing and you want to get flood, as long as we know that there's a mortgage happening, we can close it under that 30-day window. As long as we know the loan information, we would just have to put them on the policy in order to make it be effective sooner than 30 days, even in an X zone.
Yeah. We gave you a whole bunch of data. We kind of broke it down in the end of what the things to look at. Rich, I think as another deliverable, let's do this. Why don't we go ahead and do a document that talks about things to think about that
Okay.
we can also give as a deliverable. So if you've given us your address, right, when you logged in and you've given us your name, et cetera, what we'll do is not only give you the difference in cost of insurance, but we'll also give you a document on what to think about and what to look for. Not super hard to get, but we can email that off to you. We'll obviously clearly have your email on this, but we sure hope that we've answered your questions or at least enlightened you to what's happening in flood right now, because it is all changing. And, again, it's not the enemy. We need FEMA to be able to give insurance to people that can't get private or live in areas that they've always lived in but are just prone to flooding. We're blessed, Rich, here in Southwest Florida. I don't have them on all of Collier County or in Lee County, but one of the city managers on Marco Island, the number of flood policies that had claims in the last 4 years was like under 40.
Yes,
So really low.
yes. I can touch on that a little bit, and I don't have numbers, but I know flood claims from Naples and Marco Island were very low. Goodland, Everglades City were a little higher, especially
Yeah.
after Irma.
Yeah, that especially after Irma, some of those areas flooded, but
Mhm.
they are pretty low level areas
Yes.
to begin
Yes,
with,
they are.
right?
Mhm.
So this isn't, the benefit of our area, and I tell this all the time to my buyers, is we are surrounded by mangroves and they take wind and they take surge and they kind of help us out. But that's another webinar for another day.
Absolutely.
Rich,
Absolutely.
what we are here now is making sure that we're protecting your home. If you have a question, make sure you send us an email at info@Bartos Group. We'll be getting you out that information. And we sure thank you for taking the time to attend this very informative seminar, webinar, since we're on the web. Rich, Thank you so much for helping us out
Mary,
here today.
thank you very much for having me. It was my pleasure.
Oh, great. And until next time, we look forward to seeing you here in Southwest Florida, buying a home on the water and enjoying it. Ciao.
Thank you.